Okay, I'm back. Sorry about that. Sorry about that. It's kind of like it's actually one of us, actually, one of the guys from the team. Let's continue. Now you have to understand that every structure has its own time frame. Okay, there's when you're trading from the 1 hour time frame, the only reason why we do top-down analysis is because we want to know which structure is within which time frame, where are we operating from? Because now this, for those of you who don't know what internal and external structure really means, this you're seeing being created are called internal structures. Now, on the lower time frame, market moves like this on the 1 minute time frame, okay, trying to form, let's say this, which is on the daily time frame, right? So for the 5 minute time frame moves like this, creating multiple highs, which are likely to hold until we take out the swing low of, let's say, the 1 hour time frame, okay? Once this has been cleared out, you want to understand that the only reason why we also go down to the lower time frame to look for entries are because we understand that if price is going to be going back up before coming back down, we're going to be seeing something like this. We're going to be seeing something like this. So instead of trying to predict when price is going to be heading back up, trying to get an entry from right here, and then do something like this, unknowingly, if price is still going to keep going back down, to follow the weekly, maybe the weekly structure or something like that. So to be on the safer side, what we do is we wait for the lower time frame structure to give a change in character. This is where a change in character comes in structure. Now, when you explain about structure, a lot of people don't understand what a change in character means. It's more like saying like a break of structure on the lower time frame, because you can't really count the 1 minute break of structure as an official change in character of the 1 hour structure. Okay, so I don't know. To me, it's not important because I just call them all break of structures of different time frames. Because on the 1 hour time frame, you could have a change of character, which is just on the 1 minute time frame, you could have a change of character, which is just moving to the premium of this range. Okay, but now on the 1 minute time frame, you could see something like this. Let's say we zoom into this. All right, so let's say zooming into this, we see something like this. Okay, so this could serve as a change of character. Now, this I'm zooming in. I'm just saying, let's say we were at this point. Okay, so that's just that point. We haven't seen this other up movement yet. So this side hasn't happened. We're talking about just this point. So in the 1 minute time frame, we have this. Now, this you see right here is the weekly, or let's say the daily, all right? Then this we have right here, just this move down, is the 1 hour time frame. Right now, zooming down to this on the 1 minute, we now have this. Okay, no problem. No problem. All right, so on the 1 minute time frame, we have this. Now, if you call this a change of character, right, it's because when I asked that question, because I don't see a difference from this and a break of structure, but when I asked the question, someone actually answered me perfectly fine. He said, because there's every probability that price could want to mitigate the premium of just this range. Let me take this out, Price might want to mitigate the premium of just this range. Just this range, from this point to this point, before going back down, just doing something like this, which is this. So to be on the safe side, what they do is that they call this a change of character and actually not a break of structure. So what they do is that they wait for price to officially do something like this, right? So they call this a change of character and then call this a break of structure. Okay, then this will be the inducement, which was caused, within the change of character, because this did not officially break structure. This wasn't the low which broke structure, but this, right? So this will be acting as the inducement, reducing whatever is below right here. Okay. Okay. Let me try to slow down. All right, let me try to slow everything down and to help everyone else understand me. Okay, so let me say on the 1 minute chart. Let me go to the 1 minute chart and try to show you what I'm talking about. Okay. Now you see, price was actually bearish from here. So let's say this was the 1 hour chart, all right? So we had something like this, and then like this, and the price is going back down to take out this low. Okay, so now this low has been cleared out, and we're expecting some bullish intentions back into the premium of this particular range. Okay, so now expecting this, we want to take an entry from here, right? So we zoom in. Okay, no problem, no problem. All right, stay safe, okay? So we zoom in on this range of the lower time frame. So now in the 1 minute structure, what do we see? Now we've understood that price has cleared out the 1 hour low, right? Which is this. So this is a breakup structure, and we're expecting some bullish intentions to the upside, right? So now, to be on the safer side, let me show you an example what I mean by a change of character and what we mean by a breakup structure. Now, as you can see, this was the structure which went back down, right? So you could say this is an internal high, which is also a swing high, if you can see, on the lower time frame, let's say the second time frame. But then you see price did this. You see, that's like the 30 seconds structure. This is why I was telling you guys that every structure has its own time frame. Okay. So now you understand that this is the 1 minute structure. This is the 1 minute swing high, 1 minute week low, which is the external low, and then the 1 minute newly formed week low. Okay. So if you want to trade from here, you have to be observant of, sorry, we have to be observant of this range. Okay, so now we were supposed to trade from this, and we know price has cleared out the 1 hour week low, right? This of the 1 hour structure, which is that we have behind. But then we're still going to be observing this on the 1 minute structure because we know price could easily mitigate the range of the 1 minute, which I showed you guys earlier on the diagram. So now on this 1 minute chart, where would be the significant POI which we would have? Let me take everything out so it would be easier for us to identify. So now we see this is the range. So anything being induced around these points would be an entry opportunity, right? So first of all, I would mark this guy as a POI, okay?
Sorry about that. Open your mic, Jay.
Oh shit! So you guys haven't been hearing me since? Oh, sorry, I had no idea. I had no idea the mic was mute. Huh. Um, where did I stop? Where did you guys stop hearing? What was I explaining? Can anyone tell me where I stopped? Yeah, where I was stopped explaining before the mic went down.
Just 1 minute. 1 minute.
Okay, so as we have seen, we have understood that this is the structure of the 1 minute time frame, right? So we can clearly see that we have a POI here, which is coming from the 13-minute structure. This is now the 30-second structure, right? Which is within the 1 minute structure because this is the 1 minute range. Now this is within the 1 minute range, which is the lower time frame, which we know as the 30 seconds, right? So now This being the 30 seconds, we say within this range, is there a possible POI? Because this is also a strong high, right? Because it broke structure as well. But now this is a strong high of this range, not this. This is a strong high of the overall range, right? But now this is also going to be significant for us because we know we're doing multiple time frame analysis. Now, within this range, where's the significant POI we have? This is how I pick my minor POI. Someone was asking me yesterday, how do I pick minor POIs? Now, within this range, I would look for something significant as well to pick, to observe as well, because price could, as we all know, the only reason why we're within the 1 minute structure is because we know price could mitigate something within this range and then head back down to clear liquidity. So the best to do is to also observe this range. Once this high has been broken, then we know the 1 minute structure has been broken. Then we move above to the 5 minutes, trying to trade around it. Now, seeing this right here, we know this is a weak low. This is a weak low, not just because of this range, but because it's against the higher time frame direction. This is also against the 1 hour, the 4 hours, 30 minutes, the 50 minutes, the 5 minutes. This is just against the trend. So taking a trade from this point is just a counter trend, and you should be very, very observant and careful of that. Okay. Now, you know why this got a reaction? This only got a reaction because we had an inducement. Okay. You see, we also had an inducement here. A lot of people will be looking to trade from this. So we got an FU from this point, which mitigated this guy. So this stopped everybody out who was looking to trade from this. All right. And then went back up to clear out inducement as well. Okay. So now let me explain to you why I would pick what I would pick within this range. Now within this lower time frame range, what would be my focus? We see this. This is inducing, right? You could say this guy mitigated the fair value gap and then broke structure, then had an inducement. What does this look like? You see that, right? Inducement, cleared liquidity, broke structure, cleared liquidity, inducement. So from the body of this to the wick above would have been my POI, right? This would have been my POI. I would observe, I'm giving you the honest, I would have been observing from the body to the wick, or less, only if I have refined, to the lower time frame and I've seen something, within the lower time frame wick. But most of the time, what I do is that I observe from the body of this to the wick, right? Because I feel like this was a mitigation of the lower time frame. But sometimes this also gets something significant only if you refine that to the lower time frame. But now we know we are at the 1 minute time frame, and we really can't do anything from this point. All right. So observing this, you could see inducement was being built here, right? Because it was mitigating an inducement point. And I can guarantee you on the 5 minute structure, this would be an obvious order block. See here, but let's say on the 5 minutes and see how it looks. Hopefully it doesn't mess. You see that, right? You see? Everyone's saying this. You see, so everybody is paying attention to this other block, which is also a confluence to our POI above. So this is an inducement. Now you see, I did not pick a random high to name it an inducement, but because this high, it's an obvious point where a lot of traders will be taking a trade from. So they're being induced. Induced is an attraction. This other block is the attraction. And then you could see clearly it's being built as a support at a support and resistance zone. Get what I'm trying to say now, right? So now the confluence of structure from here is that this is a lower time frame structure, and anything could happen. Now, you see why I said the higher time frame is also important. Understanding this, we understand that we're picking a week, and this week hasn't been mitigated. If we're looking for the 5 minute time frame, I would have been picking the full week because this would be a hidden order block, all right? Because no mitigation within the week, something like this, this did not mitigate the opening. So the opening of this week is still available, all right? So you see, we got this. Let's go back to the 1 minute. Oh, where is the chart? See, on the 1 minute chart, it looks like this. So this would have been my POI, which I'll be observing, all right, using the data from the 5 minute time frame. So we see this happening right here at our POI, which is also an inducement, right? So this is like a confirmation for our POI, which is this above, that this is likely to hold. And you can see the momentum shifts from which price took out this low, which is like momentum shift, right? So there are two ways I could take a trade from this. Knowing that this is the lower time frame, knowing that this is the lower time frame structure, I would have done something like this, and then understood that everything above this, everything around this is an entry opportunity. All right, this is like taking a trade when you know that there's no obvious POI around this. And then I could also mark this out. I would mark this out as a supply zone. Okay, and having this as an inducement. So we have this as a POI to be observing as well. But price came in, did not mitigate the POI, but then, just took out the liquidity, mitigating the fair value gap within it. But this would have been a POI, which I've been observing as well. But this is a 1 minute chart. I do take aggressive from the 1 minute chart because this is like a confirmation. This is like a confirmation point of our trade. All right. So explaining this, all right, we have a question from Nick. It says, how you pick a POI? We notice that JO have from the chart, blah, 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 blah. On the right, no, that's not the question. I think there's a personal question. I'll answer him when I'm done with this section, okay? So now understanding this is what I was trying to explain with the diagram earlier at the beginning of the section. So you see the importance of structure. Structure helped us to look at this as well, knowing that we still have a possible POI above it. So once this is broken, we know that the next direction for price is the higher time frame. Okay, so once this high has been broken, we know this high was inducing something right here. Okay, so once this high has been broken, where would our POI be? We would flip this zone, look for something like this, but the other way around into this POI. Not trying to sell from this POI anymore because we know this is going to get broken. All right, so this was a confluence we got from structure, and structure helps us to understand inducement and POI. So, structure is the most important thing, and then you have to understand structure to be able to use inducement or POI. Next week, we'll be going into a more detailed inducement and liquidity, know more about that. But then on this point, I'm trying to show you guys that even using premium and discounts and inducements, you still have to understand how structure works. Now, let me give you another example using the other way around. Now, you see, we did have on the lower time frame, this is like on the 30 seconds time frame, this would be, sorry, on the 30 seconds time frame, this would be our structure, right? So if we were to observe that, that's what we're doing ping pong. Let's say we're doing ping pong. I don't do this anymore because it takes so much time and needs a lot of attention to observe the chart. I only, come once in a while, once on the chart, and I just pay attention to the most significant thing around, and I trade from that. Now, looking at this, we see the momentum shift from this point after price cleared an external low. Okay, so we see the momentum shift, and we understand that this is coming from a higher time frame, which we're expecting price to mitigate the premium of this range. So this is like the discount. And then we also know how we use the premium and discount, which is here. So we know anything below this is an entry opportunity. But now we don't see any POI here. So we'll wait for price to mitigate premium and see if we get anything significant. Looking at this, what do we see? You see price cleared liquidity and broke structure here. This is support and resistance zone, which we see multiple lows are being built. So this is like an inducement, and we know price will be returning back down to mitigate something within discount, right? Using this and knowing that it's like a swing low to the swing high, because this low was the low which broke structure, right? And this is now our weak low, and this is being induced. This is an inducement. So using this, we understand the premium and discount of our range, and then we say pick the closest POI to our inducement. Which is the closest significant POI to our inducement? We see this is a hidden base. I would also teach you guys how to look for hidden base on the coming week. This is just the weekly market structure. So this is like an hidden base, which is being induced by this structure. Okay. And then it's also the closest to the inducement. You see, this is the resistance zone, and this is just below this. So if price is going to be weakening out all the liquidity from here, obviously it would be observing this in hidden base. Now you can see also on the lower time frame, we see the fair value gap over here, and then which makes this also a high probability zone. Okay. Does anyone have any question coming to on the lower time frame, which concerns the lower time frame and structure? So I believe everyone is okay with
hello, Jay.
structure. Yeah,
Hello, Jay.
yeah, bro, I can hear you.
Yeah, please, coming to lower time frame, if
Yeah.
price did not create something like inducement, so there is no need of looking for a POI when price haven't created something like inducement or liquidity.
I would say this. We can't really, we don't hunt liquidity because we're not the market makers or an institutional traders. So we don't know when they are going to be buying or when they're going to be selling. If I was to be looking at these charts, let's say price is bearish, and I know I'm trying to take a counter trade because the higher time frame low has been cleared out. Or even on the lower time frame, if I still see a momentum like this, understanding that my swing high of that particular range is this, and then we have the closest swing high is also this. The only time I would agree and come into a conclusion that we're having some way bullish intentions will be when price clears out these highs. Okay, so if I will be taking a trade from here, I know that it's one risky because I'm trying to trade against the trend. Okay, which is not advisable if you haven't have.
Yeah, sure.
Okay.
Sure.
Okay, so I will only confirm that this is a positive. We only confirm that this is a positive momentum once price clears at this swing highs. Because I told you guys, the only time the price, this structure becomes bullish is when we see something like this. So now we know on the higher time frame, we have something like this, and then we are at discount, right? So at discount, we look for buys. So now we want to look for buys from the 1 minute chart. Let's say scalp on into the 1 minute swing high, to expect a sell back down. Understanding that these are the only two swing highs within this range. And we know we cannot predict the movement of the market because we know we're not institutional traders. We're all retails, right? No matter the method you're using, it's retail trading. I would not advise anyone to take an aggressive entry, just based on momentum, right? You have to see an inducement. You have to see a blueprint because one, I believe that this, the algorithm is trading based on investors because we have the algorithm moving the market, right? And then we also have smart money traders who manipulate these retail traders because smart money isn't one person. They leave blueprints to help mark each other out because I don't think they call each other to tell where they're going to be buying or selling because all they do is observe the movement of the market and know when to buy. Okay. So if you want to be trading smart money concepts, understanding and following the blueprints of the SMC, then you have to understand that SMC would leave something like a clue. SMC will have to leave a clue for you that you're about to move. You don't tell them when to move, okay? So not because you see an order block, you believe this order block is going to be holding when you have not seen something being induced below it. Okay, so you need to see an inducement. You need an inducement below your POI before you take your POI. Even if this momentum is here, I won't mark anything below this, even this being a supply zone. I won't mark this and say we have another block here. And say we have a supply zone down here. And I'm waiting for price to mitigate one of these. Yeah, we take a trade from here. I won't do any of that until I have seen an inducement. Okay, so the closest inducement we see here is this, because this is an accumulation, right? They're accumulating right now. This is an accumulation. You can see it's like a triangle, a retail triangle. Yeah, my network is bad. I'm really sorry about that. I don't know why. I think it should be stable now. At least a little bit stable, manageable to be used. Can you guys hear me?
Yeah.
Okay, so you see this is a triangle. You know this is a retail pattern, right? That's why I called it an inducement. I didn't just call this an inducement because I saw price ranging. I call this an inducement because you see it's like a triangle. And what do people know about triangle when it comes to retail trading? You expect a triangle to form, then break out, you go up, right? It's like a continuation pattern. I did used to trade one of these stuffs back in the day, so I know this is an inducement. This is something that is inducing the retails. Now this has broken on the wrong side. I think everyone's working for a retest, which is why they're also inducing over here. So this is an inducement point, right? This becomes liquidity. So now let's say I was marking this, and then you see me marking something like this. Liquidity, and I'm expecting an FU of this point. And also to say liquidity has been cleared. All right, so why I'm calling this liquidity is because I see this by retail, and then we'll have a breakout, and they will be expecting this. The only reason this ranged around here was because they're stacking up orders. They're making people to place more trades, all right? Because everyone is going to be placing orders. They give you time to place order. That's why I say whenever you're in a trade and price starts to do this in your POI, just know that you might be in a trap. There's every probability you're in a trap. But now, also you have to understand that nothing is 100% complete. Because let me give an example. Look over here. You see there was a range, but never did price poke that. Okay, so whatever you expect, you just have to follow the blueprint, not tell them what to do. Now we know we have less than 1 minute. We have less than 1 minute in this Zoom. Once it ends, just tap the same link and we'll continue, okay? Once this Zoom ends, tap the same link and we will continue from where we stop, all right? And I will explain this more and let you know how to spot POIs and inducement. This was supposed to be our section for next week. So I will just continue with the structure and then let you understand more about structure, okay? I'm going to be giving an assignment today, which would follow up immediately after this section, okay?